Hello, fintech leaders and builders. I'm Vasil Solashuk from Insart, Fintech Business Accelerator. This is the next episode of the Guts, Greed, and the Fintech podcast, the show for fintech entrepreneurs and investors who are not afraid to take the risk, to reap the reward, and build the brighter financial future. Today, we're diving deep into agentic finance topic, the AI-driven shift on how fintech platforms operate, manage risk, and make personalization. In this episode, you will learn how the investors spot the next wave of agentic innovation and what founders need to know to stay ahead in the AI native future. And our today guest is Matthew Murphy, a general partner in Montage Ventures. Hello, Matthew.
Thanks for having me.
Matthew is the successful operator, entrepreneur, and investor whose experience spans from founder and marketing leader for Chime Technologies to the successful IPOs and exits of companies like SoFi and FiscalNote. So Matthew, can you tell us a little bit more about what you do right now?
Definitely. So I'm a general partner at Montage Ventures. Montage was founded 11 years ago with really a simple but profound goal of maximizing founders' ambition. So we partner up with founders who build technology to transform three core sectors, right? Financial services, healthcare, and commerce. These areas make up over half the US GDP, and we believe are really primed for disruption. Our team is made up of talented founders and operators, right? We've all built and scaled companies before, and we've scaled companies and built companies across the three categories: financial services, healthcare, and commerce. And really, we can bring relationships and experiences that we have to our founders to help them win. We also have a large network of global strategic corporate partners across insurance, financial services, real estate, construction that we work closely with on a daily, weekly, monthly basis to really bridge innovation between startups and corporations. A lot of times these corporations become the early customers for our startups that we've backed. When we invest in a startup, the capital we deploy, right, which typically ranges between $1 to $3 million as kind of that first check-in, that's really the least amount of value that we bring to the company. Our goal is to be the closest thing to a co-founder outside of the business, really a thought partner, someone you can call when things are going great, and more importantly, when things are not, right? We work closely with our founders, often placing key hires, making initial customer introductions, and really helping them build out the right follow-on financing and fundraising strategies. So, really acting as an extension of their team.
So Matthew, as I know, Montage Ventures emphasizes agentic finance as one of your core investment topics. And for those newer to this term, could you briefly explain what agentic finance is and why it matters now and specifically for yourself?
Yes, thanks. As everyone knows, right, AI is a massive transformation across the entire, right, technology and broader market space. And so when we talk about agentic finance, right, what we mean is how is AI transforming financial services and the broader finance category? That is coming in the form today of AI agents that are doing tasks and jobs and workflows within corporations, right? Whether it's on the finance stack or it's on the broader, kind of cross-departmental stack of financial service companies, right? So for example, we've seen a lot of our corporate partners use AI agents to streamline either data intake, data processing, really the ability to process large amounts of data, right, using internal LLMs that can compute at higher levels that have been done before, right? From there, that information can get cleaned and processed and then pushed out to actionable, right, outcomes that the companies can use, right, whether it's in customer service or it's in finance, marketing, sales, data, all the above.
Yeah, absolutely. And by the way, we at our FinTech Business Accelerator are seeing a lot of use cases related to the reporting specifically, all kind of reporting for financial advisors, for nonprofits, for insurance, payments. And with the generative AI, you can build really very efficient agents. So you don't need to create the reports like reporting templates manually, but you actually use the Gen AI. So this dramatically speed up the process. So this is just one of the use cases we have seen recently, like dramatically trying to implement this for new startups and for the existing companies as well.
That's right. I mean, if you have a clear workflow, right, of tasks that are very defined and very repeatable, you can build an agent, right, to do exactly those tasks, right, time and time again, to a high degree of accuracy, right? So, for example, if you are underwriting loans, right, and to underwrite those loans, you need a set of files, right? A set of information, right? Whether it's income statements, bank statements, you name, right? Whatever the set of data is, the agent can then get that information in, right, from a consumer or a business, process that information against a buy box, right, of what types of loans or risk they want to take. And then from there, be able to interact back and forth with the consumer and the internal underwriting team to ensure they have all the data they need, right, to underwrite appropriately. And then even push forward a recommendation, right? Should this loan be approved? At what terms? And then interact back and forth with that customer set. So it's incredibly powerful because it's not necessarily eliminating jobs today. What it's doing is it's supercharging jobs today. And I can give you some examples of some portfolio companies that we have that are using Agentic AI to basically take their teams and 10x the output, right? And the ability to process information.
All right, Matthew. So that really makes sense. And still, in the world of AI, you need to know how to actually implement all the crazy ideas you have. And you have transitioned from operator to investor role. So you have a really great journey as an operator, as a founder, marketing leader. So can you tell us what specific experience is valuable for yourself from your operator life for your investor role?
It's a great question. As I look at evaluating startups and evaluating founders specifically, because we come in at the earliest days, right? The seed stages, where in some cases that is two founders, a presentation, and a big idea, right? With no real product in market. And so as I look back at my experience as being an operator for many years, being a founder for many years, building a large network, right? A global network of leaders and operators and founders and investors that I've interacted with, really been able to build out some strong pattern matching skills, right? The ability to underwrite a founder and their ability to execute, right? Their ability to build what they are dreaming and envisioning, right? Can they actually pull that off, right? And it's not just based on their technical ability or their business acumen. It's really based on, are there macro headwinds or tailwinds? Are there technology advantages or disadvantages? where does the market they're going after stand from the ability to receive innovation like the founder is dreaming and imagining? Are they one step ahead or are they five steps ahead, right? So really the ability to figure out where the puck is moving, and can the founder, is this the right time for the founder to bring this level of innovation into the market they're going after? And then on top of that, right, are we the right investors that know a thing or two, have the relationships, the experiences in that space where we can then deliver a differentiated advantage outside of just the capital, right? So at the end of the day, at the seed stages, you're really underwriting people and their ability to do what they dream, right, can be done. Easier said than done in this context, right? Harder to do it on the fly when you've had, maybe one or two or three 30-minute sessions, maybe a hour-long coffee. You have to be able to get to conviction very quickly in this market because it is moving incredibly fast, right? And founders have opportunities and options, right, on who they want to work with from a VC firm perspective. And so, all of our training and experience helps us really get to that level of conviction as quickly as possible to ensure that we're picking the right company in the right race that we can impact.
So, some argue that in the age of agentic AI, investors should still wait for, hot metrics before writing a check. But as I see, you often invest in pre-traction. So how do you build this conviction actually in the agentic fintech founders before they have the traditional KPIs and the traditional traction?
One thing I've learned, in investing in startups for now almost 15 years is that the company, right, the idea, 9 times out of 10 changes, right? The initial pitch, right, that was given is not always, the company that is built, right, that succeeds and wins. And so you really have to find founders that you truly believe in and you believe they have the capabilities, skills, grit, hustle, desire, right, to go out and win in a space and really find the right founder market fit and know that that will iterate a few times over. And so I'd say the biggest mistakes I've made is when I have fallen in love with the product over the founders because you're with those founders for 8 to 10 years, right? You may not be with that product for 8 to 10 years. And so you really need to create a relationship, right, that compounds and creates more value where it's not just transactional in the sense that you're giving capital and the founders are taking capital, but it's more of a relationship, right, where you're interacting, you're listening, they're listening, it's collaborative, and really helping empower the founders to maximize, right, their ambition and their ability to create something unique.
So, Matthew, do you have any specific list of checklist of capabilities and traits that the founder should have so that you would consider investing in them?
There's not a specific checklist, to be honest, right? It's not about what school you went to, what company you went to. Did you drop out? Did you not? What did you study? It really comes down to the magic, right, amongst the co-founders and the founding team and our team, right? And if we believe, 1 + 1 = 5, them plus us equals something powerful, that's a relationship, right, we want to, be in and take part in. So I wish I could give you an exact checklist of you have to do these things, you have to study this subject, you have to work at these companies, but it's just not that clear.
Okay, absolutely. But if we, for example, talk about, let's say, some major positive signals and some major negative signals, and as soon as you have invested into dozens of early stage fintechs, what are the common patterns that you have seen about the positive and negative signals?
Yeah, so on the positive side, right? I mean, if we have time to get to know a founder or co-founders before investing, and they tell us they want to build this, and they're going to have this amount of traction in this period of time, and then we check back with them in 6 months, and they've achieved that, if not beat that, then that's a very positive signal. If they have not achieved it, right, and they've fallen incredibly short, we start to doubt, right, their ability to execute or their ability to understand where the market is, and so that's a negative signal, right? But if they tell us, hey, we're going to get 25 customers over the next 6 to 9 months, we're going to have 1 million in revenue, and they do what they say they're going to do, that's an incredibly positive signal for us to really lean in. We like meeting founders when they're not fundraising. We like meeting them when they're building, and maybe we can make some key introductions, right, to some potential customers. Maybe we can help think through their go-to-market strategy and give them insights or lessons that we've learned that can kind of help them build defensibility around it. And then from there, they can execute right against that. We can get to know them over a period of time and then come in and preempt around, right? That is the best case situation for us.
So speaking about the agentic finance, which promises personalization, automation, all types of other use cases. But for example, if we talk about embedded finance, like it also introduces real regulatory and operational challenges. And what's your take on how do you help founders navigate that, that tension between innovation and compliance, especially in the, that kind of high stake verticals like wealth, like lending, even payments?
Yeah. I mean, hey, financial services are regulated, right? I've worked within a large broker dealer, large, regulated financial businesses before and learned firsthand, right? Compliance and regulatory aspects really matter. And you have to comply. And so I tell our founders, you have to follow the regulation within a fintech or a financial services company, because if you don't, you may go to jail, right? It's not like you can just shut things down and move on in building a consumer product. Very, very different space. Now, the founders that I have a ton of respect for are ones that have helped shape regulation around what they're building. For example, just look at all of the clarity that has come in the last week, right, from a stablecoin perspective, right? Stablecoins were operating slightly outside of the regulatory environment because clear regulatory frameworks were not established in the United States. I'd say V1 is not still 100% clear, but it puts pen on paper and helps folks understand kind of where the regulatory aspects are moving, right, from a directional perspective. And that level of clarity brought an incredible level of confidence, right, in the United States support of stablecoins. And so that provides founders operating in that space a little bit more comfort, right, into where they can really iterate and push the envelope, because now they understand, right, what the regulators are looking for, right? Whereas before, it was completely unclear. And so they were just operating under their best estimates. And now we at least have some guidance, right? I would argue that we need a lot more as stable coins are moving right at hyper speed at this point in time, and I'm incredibly excited, right? Because they truly are programmable money, right? In the sense of what we've all envisioned for the last decade plus. So, founders that, have a deep understanding and even connections, right, within the regulatory side, I believe will benefit because they understand the rules and therefore they can drive innovation.
So, and speaking about the agentic finance, what do you see as a major risk? What kind of major risks would you highlight for the founders from the regulatory perspective? Like, for example, I do have my proprietary data. I feed this data to the large language model, and there could be all types of regulatory issues with that. But what are the most specific challenges that the founders should address if they implement the agentic finance use cases right now?
Yeah, I would say that the agentic finance use cases I've seen so far are not able to fully run independently on their own without any level of human interaction or oversight. And so founders need to understand that, right? As you're pushing private, secure information about your customers or data on your customers into these AI agents, you need to ensure that that data is compliant, right? That data is incredibly secure and is not violating, right, any level of SOC 2 compliance or any regulatory aspects, right, that you are governed or ruled over, and that you have the ability to stop some of these agents, right, if they're making the wrong decisions. You have the ability to have the final approval or authority on actions the agents are doing or recommending. One thing I heard from Kevin Wheel, the head of product at OpenAI, was the LLMs we're using today are the worst LLMs we will ever use in our life, right? Because the speed of innovation that's happening at this point in time is so great, right? That every new iteration that gets pushed out, right, from OpenAI or from Perplexity or Gemini is getting dramatically better than the one that's currently in market. So that's incredibly exciting, right, for founders that are either leveraging the LLMs from the hyperscalers or right the open source LLMs that are out there as well. The key though is to remember that you're operating in a regulated space and you need to ensure that your agents are compliant.
Okay, yeah, absolutely. So, Matthew, to wrap up our conversation, so we talked through a number of use cases, how you can implement the agentic finance. And right now, a lot of companies also improve and optimize their own operations with all types of generative AI tools. What kind of tools you have found the most practical to run your business, and what would you advise and what you're advising to your portfolio startups to use to actually optimize their operations?
Yeah, so we are using AI tools internally within the venture fund. How we started was we identified 5 simple problem statements, right, that we wanted to use AI to solve for us. One of those was within the spaces that we operate, financial services, healthcare, and commerce, we want to see every amazing founder literally the moment they decide to incorporate and launch their business, right? That they're operating in stealth mode, they're working on something new and exciting. We want to get an alert within our system that says, hey, you should reach out to this founder right away. And so we've built AI tool sets internally to enable us to do exactly that. Right. So that when someone marks, working in stealth mode, working on something new, or someone tweets, right, or we know these product leaders or tech leaders worked at these companies that we respect, that spin out interesting founders. We want to know exactly, right, when those actions happen so that our team can be proactive and start building a relationship. But then we give that same advice to our founders, right? So take simple, problem statements that you have internally, and then how can you leverage agents and agentic aspects to solve those problems, right? It's very exciting because, we couldn't have done this, right, 12 to 24 months ago. And the speed of change and innovation is just so exciting.
Yeah, love it, love it. So it's a really great approach when you formulate something for yourself and then you can spread out this to the world, actually. So Matthew, thank you very much for joining us today.
Excellent. Really appreciate the time. This was fun, and look forward to talking again soon.
Yeah, Matthew, absolutely. And thanks to all the fintech leaders and builders who are watching us today. We have more fintech visionaries coming out soon. So like, subscribe, and push the bell button not to miss out. And that's all for today. And it was me, Vasil Soloshuk from Insart, and Matthew Murphy from Montage Ventures. And let's keep building the fintech and brighter financial future together. Thank you, and bye-bye.